Well, the second quarter of 2025 is officially behind us, and that means it is time to take a deeper dive into see how Irvine's premier guard-gated communities performed in Q2. Historically, Q2 is the busiest time of the year for the residential real estate market. However, that was not the case this year. Irvine's residential market continued its slow pace from Q1 into Q2 as many prospective buyers remained hesitant due to global economic uncertainty, slightly higher mortgage rates, and one key factor that only played a role to Irvine's luxury market, but you'll have to stick around to the end of the video for me to cover that factor. The overall slowdown in Q2 was felt across all of Irvine's premier guard-gated communities. However, some were a little bit quieter than others. So let's take a look to see how each community performed. Starting with Altair, we only saw 2 Toll Brothers homes and 2 Lennar built homes close in Q2, which was a 71% decrease in sales compared to Q2 of last year. This drop in sales isn't due to a lack of inventory either. There are currently 9 Toll Brothers homes and 9 Lennar homes still on the market today. The 2 Toll Brothers homes that did sell averaged out to $1,021 per square foot, which is a decrease from Q1. Meanwhile, the Lennar homes sold for an average of $1,040 a square foot. However, that is slightly inflated due to the sale of 72 Bellatrix, which was a highly upgraded home on an oversized Parkview lot. Next up is Orchard Hills, and the results were a bit mixed. The Toll Brothers section saw 2 homes close during the quarter, which is roughly in line with its normal pace. However, the non-Toll Brothers area saw more activity with 18 homes sold, which was an improvement over the very quiet Q1, but still 10 fewer sales than Q2 of last year. Again, the slowdown isn't due to a lack of inventory. There are currently 47 non-Toll Brothers homes and 4 Toll Brothers built homes listed for sale. Moving south to Laguna, Altura, and Hidden Canyon, both communities experienced a decline in total sales in Q2, with only 1 home closing in Hidden Canyon and 2 in Laguna, Altura. While limited, the 2 Laguna, Altura sales did raise the community's average price per square foot from the previous quarter, while Hidden Canyon's lone sale of 122 Scenic Crest closed at a strong $1,582 per square foot. Last, but certainly not least, Turtle Ridge and Shady Canyon, where both communities also felt the effects of a slower Q2, though not as dramatically as the others. 5 homes sold in Turtle Ridge, boosting the average price per square foot to $1,453. Meanwhile, Shady Canyon maintained its trend of 4 homes sold per quarter for the 3rd quarter in a row. Its average price per square foot dipped slightly, largely due to the sale of 51 Echo Glen, which sold for $12 million, but only $782 per square foot, thanks to its enormous 15,024 square feet of interior living space. As I mentioned earlier, this slowdown in sales has been seen across Irvine, Orange County, Southern California, and beyond. But there's one factor that has been uniquely affecting just Irvine's luxury resale market, and that's the Summit at Orchard Hills. This brand new luxury development has been a direct competitor to the majority of these resale areas. The Summit first opened in early May when Shea Homes opened their model homes to the public, and Brookfield and Toll Brothers began to allow their priority list buyers to come in for private showings. Since then, sales have been strong. So strong, in fact, that the Summit sold more homes in Q2 than all of the previously mentioned guard-gated communities combined. This new development has successfully captured the majority of the limited amount of luxury housing demand in Irvine and continued to put even more pressure on the resale market. With 520 homes planned for the community, the Summit will continue building, selling, and competing with this resale market for years to come. So where do I think Irvine's luxury housing market is headed into the back half of 2025? Well, I think it will follow historical trends for Q3 and Q4, which means we should see buyer demand levels continue to slightly decline, total sales will also drop down a little bit, and supply levels should increase a bit as well. All three of these factors lead to the market continuing to shift in the favor of buyers. However, there is one key factor that could quickly shake all of this up, and that is mortgage rates. Since the end of May, the 30-year fixed rate has been on a steady decline, which has brought back some buyer confidence. We're going to need to see a bigger drop in rates to really shake this market around, but hey, crazier things have happened in the past. Let me know in the comments below, where do you think Irvine's luxury housing market is headed in the back half of 2025? If I don't hear from you, well, then I look forward to getting to bring you the next Irvine luxury housing market quarterly report. Cheers.